job, new baby, new home? If so, you also have new health insurance options. You don't have to be stressed about it. We're going to review all of your options together today and give you some highlights on why you might go with one versus the other, and also when you can enroll. So welcome to Health Insurance Sherpa. I'm Lisa Martin, guiding your health insurance journey with clarity and confidence. Today we're going to talk about life events. They can be a lot, especially if you don't know what your health insurance options are and you're worried about what the costs might be. This is often why people first contact me, but also why I love what I get to do. I get to reduce someone's stress just a little bit by helping them walk through their options, provide some clarity and some information. And they also know that they have somebody to walk beside them. So we're going to start with some quick definitions. We have qualifying life events and special enrollment periods. Qualifying life events are a major life change that can affect health insurance eligibility options and timing. And then the special enrollment period is a limited window where you can make changes or enroll in coverage outside of open enrollment. These special enrollment periods typically are about 30 to 60 days, so you want to be able to catch them and be aware of them. We're not really going to get into Medicare. They have longer enrollment windows, and it gets a little complex depending on what your situation is. So also, just so you know, if you don't have a qualifying life event, you usually have an open enrollment period either with an employer group plan or with the individual ACA plans. With employer plans, you get 30 days to enroll. If you have a qualifying life event with the ACA, they give you 60 days. So what are some common life events? Losing employer-sponsored health coverage. So maybe you have a job change, your hours were reduced, so maybe you're no longer eligible for benefits, or maybe you're retiring. Another one would be turning 26. Kids do get booted off of their parents' health plan at age 26. You could have been married, maybe you got divorced, and therefore lost your health insurance option because you're no longer an eligible dependent. You maybe had a baby, or adopted, or have a foster care child. The death of a covered family member. Maybe you became a U.S. citizen or were leaving incarceration. Or if you moved to a new county or state where the plan options and the premiums are different, that could also be a qualifying life event. Just keep in mind you want to enroll in the state that you are a resident and where you pay your taxes. Also changes in Medicaid eligibility or several other options, but those are really the main ones. So be sure to contact your broker, your employer benefits department, or the marketplace as soon as your life change happens. So what are your main options? First of all, you're going to have COBRA available if you're leaving an employer plan. Typically, not in all cases. We have COBRA. We also have mini COBRA in case your employer has less than 20 employees. So COBRA benefits, why you might want to keep them. Maybe you really like your doctors or you have quite a few specialists that are important to you. A big reason to keep COBRA would be if you've already met your deductible or your out-of-pocket max for the year. Typically, they do run calendar year. If you've met all or part of that, it would be a good reason to consider COBRA pretty seriously, or if you're in active treatment for a chronic condition. So COBRA, you get to keep it for at least 18 months. Sometimes it's 36. For instance, if your spouse dies and that was the person you were enrolled through their employer's plan, you could keep it 36 months or less. Generally, you pay the full cost for whatever the billed premium is to that employer group, plus a 2 to 5% kind of an admin fee on top of that. Now, another option that you could consider is the ACA marketplace. If you don't have a group health plan available at your job or your spouse's job, or maybe your income has dropped, or you think it's within range to get a subsidy, these subsidies are really valuable. I really think this is an option that everybody should consider, regardless of what the situation is, just to find out what the premium is, and then also to compare it to what your maybe your COBRA benefits are. So with the ACA Marketplace, you do get 60 days to enroll, but keep in mind you have to apply before your desired effective date. So today we're in August. You would have to apply by August 31st to get a September 1st effective date. Now, the exception to that would be a newborn. If you have a baby, that baby's coverage and your coverage could begin on the baby's birthday. So you want to see if you qualify for premium tax credits and cost share reduction. Those are two separate benefits, very, very valuable. Even if at first glance those ACA plans look expensive, if you can qualify for those benefits, you're going to be very surprised by how low your premium can go and your benefits can even get richer. Another option you can consider is if your spouse has an employer plan at their job. You could be a domestic partner possibly. Some plans do allow that. You can look at your spouse's plan. So losing other coverage is a trigger. You just have to enroll within 30 days. So you want to definitely capture that. One more option is Medicaid. Whatever your state's Medicaid program is, here in Arizona we call it Access. This is if your income is low enough to qualify. So I think right now the eligibility for a single person is about $1,700 gross income to qualify for Access. So your income does need to be lower to qualify. But if that is possibly you, then it is low cost or no cost coverage for the plan. The state health plan plus the benefits when you receive them could be very low as well. Now, if you're 65 or you have a disability, Medicare might be on one of your options. So look into that, but again, gets complicated. So we would probably rely on Medicare Mike or whoever your broker is for that. There is another type of coverage called short-term coverage, but I always warn people, be sure to look at the benefits, look at the exclusions. They are not going to cover your pre-existing conditions. They will ask you some medical questions. So some of the high-level questions are, do you have a heart disorder, diabetes, stroke, an autoimmune disease? If you have any of those conditions, they will decline coverage. You can keep those plans for 1 month or even up to 36 months, at least as of now. Sometimes those periods change, but minimum of 1 month. So those are kind of designed if you're between two employer plans, that might be an option to consider. It's quick and easy to get those going. So now important reminders to keep in mind. So the timing matters. Remember, enrollment windows are limited. It's 30 to 60 days from that life event. You want to keep documentation. If you have proof of a loss of coverage, for instance, when you leave an employer plan, the employer might give you a COBRA letter or they can just provide a loss of coverage letter. Often the insurance company will issue a certificate of termination. You can keep those. You may need proof, especially with the ACA marketplace. You want to review more than just the premium. Check your doctors, check the network. Is it a national network? Is it a restrictive HMO local network? What prescriptions do you have? Are they going to be covered on that new plan? What's the cost going to be? Formularies vary between different companies. And again, look at if your current plan, if you've met your deductible or you're out of pocket, that's a good reason to look very seriously at that option. So again, look at all of your expenses for the year, for the rest of the calendar year at least. Okay, let's get into some examples. For instance, if you just got married or you had a baby, you do have 30 days to enroll them. Plan ahead, especially with that baby coming, because it's easier to do that paperwork and things before your sleepless nights start. Talk to your HR before the big day. Talk about the cost, the plan options, and how to enroll. When it's open enrollment, that would be another opportunity. So let's say you decide to take some type of insurance at that time. When would be the next time that you'd be able to jump on that employer group plan? A lot of times it is January 1st, but again, it could be any time during the year. And then always also explore individual plans. Employer plans can be very expensive, especially if it's just for a baby. Because the ACA plans are age-based, new kids and newborns are very inexpensive to insure. I have some plans and some kids on them that are like $250 a month. I have some employer group plans where it would have cost them $600 to $800 just to add one child. So even if you're not going to get a subsidy, might be a good option to consider. So another example would be is if you're losing coverage with your employer, maybe you were let go, maybe you're retiring, you're moving, you have a new job, talk with your HR person, get your COBRA letter. They should send it to you within 2 weeks, but that doesn't always happen. So get the letter from them as soon as you can. And if you have a new job, when does that new health plan begin? Do they offer health insurance even? Compare the benefits, network, and cost. Now, if your new employer does not offer health insurance, then you'll want to look at the ACA marketplace. It could seem expensive at first, but a lot of people most people qualify for a subsidy which is a discount on your premium. For instance, a single filer, if your modified adjusted gross income is between about $23,000 to $62,000, that's the range you need to be in to qualify for a discount where the government will pay part of that premium. There's some kind of sliding scale where the older you are, the more money you get. So sometimes the younger folks, it's harder to qualify, even if you are within that range. So here's a tip too. If you are between jobs and maybe you only have a month gap, just hold on to that COBRA letter. You don't necessarily need to elect it right away. That COBRA is going to backdate to the day you lost coverage if something comes up. So you could kind of go bare for the month. And if nothing comes up, don't pay the premium. Keep that money in your pocket. And if something does come up, heaven forbid you get in a car accident or something like that, go ahead and elect the COBRA. Just make sure you have that COBRA letter handy. Again, it's going to backdate, so you're fully covered for that month. And then you can keep it as long as you need it. Once you do elect COBRA, though, you can't jump over to an ACA plan until the next open enrollment period. So keep that in mind. After you miss that 60-day window to enroll in an ACA marketplace plan, you have to wait until open enrollment, which is going to begin every November 1st for a January 1st effective date. So our third example, let's look at retirement. So I get a lot of calls, people planning ahead for retirement. What is my health insurance premium going to be? Everybody thinks COBRA is going to be expensive, but you never know until you talk to your HR department or your benefits department. Every plan has a different COBRA premium because everybody has different rates. They choose different plans, different companies, different networks. So planning for retirement, this is a time when often your income is going to decrease. So sometimes there's some flexibility with, what withdrawals are you going to be making, working with a financial advisor to keep that income low. And if you're going to retire at the end of the year, that's kind of might be an ideal situation because let's say you received your job income for the whole calendar year, you're going to retire, then next year you're going to have very low taxable income. Then you're going to qualify for those tax credits and keep your health insurance premium as low as possible. With the ACA plans, remember you have a possibility of a subsidy or cost share reduction. Now, if you're going to retire, you're going to look at COBRA, of course. If it's available, most employers will offer it and give you that 60-day window to enroll. Oftentimes, COBRA is a higher premium, but if you have met your out-of-pocket for the year, the rest of your care for the rest of the year is no cost. You just pay the premium, so that would be something to consider. Another reason a lot of people keep COBRA is if they travel a lot or if they have a second home. That COBRA plan, the employer plan, is often a nationwide PPO network, so we can't really compete with that on the ACA, at least not here in Arizona. And then with COBRA, dental and vision also are an option. So that's if your group has more than 20 employees. So you can elect those separately from the medical. And then, another option for retirement, let's say you're not quite 65, you can join your spouse's plan also within 30 days. So let's do a quick review of some key points. A life event may be an opportunity to improve or lower your cost for your health insurance option. Find out what all of your options are and weigh them. Contact a broker, employer benefits department, or the marketplace when that life change happens or as soon as possible. Don't miss the deadline. You don't want to have a deadline missed or a gap in coverage. Consider all of the details for all of the plans. Consider how you're going to use your health plan for the year. Do you need a nationwide PPO, or are you okay with an HMO? Most of the HMOs in Arizona, you don't need referrals, so they don't really feel like an HMO. You just have to stay in that network. It becomes very important. And then reach out quickly to me or your broker before or right after a major life change. It's always easier to plan with a little bit more time than kind of waiting to the last minute. I mean, it can be done. I've done it in probably an hour and a half from start to finish, but it's not recommended. So when your life changes, your health insurance options change too, and this can be a good thing. So before we wrap up, here are a few reminders to keep in mind when life changes. First, do not wait. Whether your enrollment window is 30 days to an employer plan or 60 days to an individual or marketplace plan, those deadlines can arrive faster than you think. If you've experienced a marriage, a birth, moved, loss of coverage, or another major change, reach out. We can help you determine whether you may qualify for that special enrollment period. Second, save your paperwork. Proof of your lost coverage, a marriage certificate, birth proof. Second, save your paperwork. If you have proof of losing other coverage, you have a marriage certificate, a birth certificate, or proof of a move, you may need that to complete your enrollment, especially on the ACA marketplace. Third, look at all of your options. A new job, a spouse, child, new address, doctor, or prescription can change what coverage makes sense for you. It could be your employer plan, your spouse's employer plan, an individual plan, COBRA. You have a lot of options. And finally, ask for help early. A quick conversation can avoid a missed deadline, an unexpected coverage gap, or enrolling in a plan that does not fit your needs best. So if you're not sure where to reach out, I'm here to help you. Be sure to subscribe for more practical health insurance advice. You can find the Health Insurance Sherpa on YouTube, Apple Podcasts, Spotify, and other major podcast platforms. If you know somebody that's experiencing a life change or may have one coming up, please share this episode. This can provide a lot of relief and just some clear answers for them that is going to reduce their stress and make it a little easier for them. And if you have a question or an idea for a future podcast, you can reach out to me at Lisa at ECAFinancial.com, or call me at 602-852-5215. Thank you for listening, and we'll see you next time on Health Insurance Sherpa.